Nike stock down more than 24% this year as Elliott Hill takes the helm as the new CEO. Will he be enough to turn around the struggling brand?
Hello and welcome. Today, we're diving into one of the most iconic brands in the world, Nike Inc., and analyzing its recent financial performance. If you're wondering whether Nike's stock is a buy, hold, or sell, stick around because by the end of this video, you'll have a clear understanding of where this giant stands after its latest earnings report. Now, let's get into it. Nike has recently seen a significant drop in its stock price, and this decline is tied to some major shifts happening within the company. First, they faced disappointing earnings results, and on top of that, they're changing their product focus while going through a leadership transition. Elliott Hill has just taken over as president and CEO, and as a result, Nike has withdrawn its full-year guidance, signaling some uncertainty ahead. So what's behind this decline? Let's break it down, starting with the fundamentals. In Q1 of 2025, Nike's revenue dropped by 10% year over year, including a 9% dip when adjusted for currency fluctuations. While that's a pretty steep fall, the company did manage to improve its gross margins, which climbed by 120 basis points to 45.4%, thanks to lower product costs and strategic pricing moves. However, net income dropped sharply to $1.51 billion, down from $1.45 billion in the same quarter last year. Adding to the challenge, Nike's effective tax rate jumped from 12% to 19.6%, further cutting into profitability. All in all, this decline in revenue and profit suggests a negative short-term trend, largely driven by lower sales volumes and a dip in digital sales. But Nike isn't standing still. The company is making bold moves to reshape its future. They're shifting away from their classic footwear franchises and putting more focus on innovation, especially in the running category. They're also building up retail partnerships to strengthen their brand presence globally. These strategies are all part of a broader goal to create a more balanced product portfolio that supports long-term growth. However, the path forward is not without risks. Nike faces stiff competition from rivals like Adidas and has to navigate market volatility, which could affect consumer spending. Add to that some geopolitical risks, particularly in China, and you can see why there's potential for more bumps in the road. Now, let's take a closer look at Nike's stock from a technical analysis perspective. Nike's stock has been volatile lately, with its 52-week range swinging between $70.75 and $123.39. Currently, the stock is hovering around $80.77, and technical indicators are signaling caution. The 50-day moving average is sitting at $80.99, while the 200-day moving average is at $91.20, showing a bearish trend. The RSI is around 44.76, which suggests the stock is approaching oversold territory, but it's not quite there yet. The MACD also points to a bearish outlook, with negative momentum building. For those of you tracking entry and exit points, the key support level is around $70.75, while resistance sits at $123.39. So what does all of this mean for investors? From a valuation perspective, Nike's P/E ratio of 23.114 suggests the stock may be overvalued, especially given the company's recent financial challenges. And while the short-term outlook looks bearish, with continued volatility and declining sales, the long-term story could be different. If you're a short-term trader, the recommendation here is sell, given the current financial performance and technical indicators. However, for long-term investors, there's reason to hold. Nike's focus on innovation and strategic growth initiatives may take time to pay off, but they could lead to strong results down the road. So, to wrap it up, hold your position if you're in for the long term, but proceed with caution in the short term. If you want even more in-depth analysis on Nike and other companies, don't forget to subscribe to our newsletter. Link is in the description. It's packed with insights that will help you make smarter investment decisions. Thanks for watching. If you enjoyed this video, be sure to like, comment, and subscribe for more financial breakdowns. And as always, if you're looking for more information, check out the links in the description below. Disclaimer: This video is for informational purposes only and does not constitute financial or investment advice. Always do your own research and consult a financial advisor before making investment decisions. Investing involves risks, including potential loss of principal.